Hello and welcome to this special TrendSpider Election 2024 stock market review. My name is Tyler Wood. I'm a CMT Twitter holder, and as always, I am joined by Alex Cole, the chief of charts here at GoNoGo. How you doing, my friend?
I'm doing very well. This is going to be a fun one.
It's going to be a great one. Nice to see you pre-market. We're recording this on October 9th. And to all of you who are watching, hopefully what you take away from this is perhaps a little perspective on how you can use technical analysis to keep your emotions or your biases in check. And listening to the market is one of the most powerful things that technical analysis provides us. Over the last several weeks, we have seen consistent news flow of very negative events. Our hearts and minds go out to all of those folks affected by multiple hurricanes. Category 5 Milton about to break ground on the coast of Florida. Multiple wars raging around the world, and a lot of devastation and destruction. And with that as our backdrop, as investors, we could become exceedingly pessimistic on where the market may bring returns year end with that much negative news attention. So Alex, why don't we bring up a chart of the S&P 500 and just take a look at what the market is actually doing in the face of all of this horrific news.
Yeah, absolutely. And this is the S&P on a daily basis at the moment, and we're looking at go bars. So all of this that's happening, we like to say, don't predict, just react responsibly. And we can see that in the last couple of months, we've re-entered a go trend. We're close to all-time highs, and we've got some strong blue bars at the end of the chart here, with the oscillator staying above the zero line. So we have to look at the charts and read them for what they're actually telling us. And at the moment, prices are in a go trend, and we're seeing signs of trend continuation.
Now, if you're new to GoNoGo Charts, the whole idea behind simplifying our data visualization without losing that important technical information is how we arrived at these charts. So everybody's developed an algorithmic way of looking at markets, combining multiple indicators. For our algo, instead of leaving it in the black box, we wanted to display those results in real time. So what you see on screen is a price panel that gives us an idea of the direction and strength of trend. So aqua and blue bars are in what we call go conditions. If you think about a NASA shuttle launch, you want to make sure that all the probabilities are on your side before you shoot billions of dollars of hardware into space. So that is a go condition when all of the indicators that are blended into these tools are in their positive and rising conditions. When you see purple or pink bars, you have strong or weak form, respectively, of a no-go trend, meaning that it is trending to the downside. And on occasion, at moments of transition, you'll see the market give us a signal that it's frankly undecided. There's a neutral reading across all of the indicators that are blended into this trend model. And as big fans of the life and work of Jesse Livermore, we refer to these as go fish bars, because in all markets, there's a time to go long, a time to go short, and a time to just go fishing. So there's a little background on that trend model. We're going to dig into that lower panel, the GoNoGo oscillator, which incorporates momentum, volume, and volatility here as we go through today's chart review. So S&P 500 on a daily basis in a go trend. But let's back this out to a weekly time frame, Alex, and get a little more context about where we have come from. Now, when we look at multiple time frames, obviously the volatility that we saw in early August, just a counter trend correction when you're looking at a weekly time frame. So the algo adjusts to the time that you are looking at, and those very significant moves on a daily or intraday chart don't even break the trend conditions. And one of the tenets of trend following is to simply stick with those securities that are working in your favor. And GoNoGo Charts helps you stay in trades throughout the period of the move by giving you those trend conditions and helping you understand that we haven't yet broken down below trend on this weekly time frame. Alex, why don't you talk a little bit about that lower panel, the GoNoGo oscillator?
Yeah, and just to highlight what you were talking about there, we are in a go trend, but we want to understand the strength of that go trend. And that's where a lot of people will then turn to momentum. Momentum tells us so much about what we're seeing in the price panel. And we want to know that the enthusiasm or the momentum of the market is on the side of the trend that we're looking at. So when we created the oscillator, in the same way that we created the trend indicator, we blended together several of the foundational concepts of momentum analysis into just one oscillator so that we wouldn't overwhelm our price panel. So we've got a lot of inputs to this oscillator, different sensitivities of different oscillators that are well used in our industry. And when we put them all together, we get one oscillator that's moving from -6 to +6. But the really powerful piece of this, Tyler, is that when a security is trending, we can use our oscillator for objective levels of support and resistance. And that's because when we created it, we did it in a way where when the inputs are in their respective neutral territory. So if you think of an RSI moving between 70 and 30, when it's in that neutral period, if all of our inputs to the oscillator are in those neutral areas, then our oscillator falls or rises to the 0 line. So what you want to see during a strong trend is the oscillator providing support if it's a go trend, or resistance if it's a no-go trend. So when we look at this trend, it's been in place now for quite some time. We're looking at about 1.5 years here. Primarily, the oscillator finds support at the 0 line. Now, back towards the end of last year, we saw a much bigger area of concern where the oscillator did not find support at 0. It moved into negative territory, and we saw a much more drawn-out correction, even an amber bar on the weekly chart when that happened. But a return to the go trend, the oscillator back in positive territory. And then since then, you can see we've been finding support at that 0 level. So very, very powerful piece of the tools. And what we're looking at now is a go trend at highs with the oscillator in positive territory, confirming that trend. Now, if anybody has done any kind of technical analysis work and you're looking at sort of size of candles, length of wicks and all the rest of it, you'll see that these candles are quite small. So there is some deliberation happening here. There is a narrowing of trading range, and we're seeing lower levels of momentum than we did on the previous highs. So taking that all into consideration, though, weight of the evidence still says we're in a go trend, and momentum is positive on the weekly chart. And that allows us then to drop down in time frame and look for sensible areas to make decisions.
So as an overall lesson to all users of technical analysis, what we're going through right now is a process of data collection first. So before we make an investment decision, before we decide where to place our capital to work, we need to understand what the market is telling us. So I know the topic for today's session is how would you position your portfolio if the Democratic candidate or the Republican candidate takes office here in the upcoming election on November 5th. What Alex and I would argue is that you should take a process to review the detailed information in front of you, because the market is a discounting mechanism. It means that all of the growth factors, the valuations, all of that fundamental information about the companies or the securities that we're investing in, as well as all of the macroeconomic data, as well as everything that we couldn't possibly know. What's happening inside the boardrooms at these companies? What new regulatory hurdles might several of these firms be facing? All of that is baked into price. And price is such an elegant and simplistic distillation of all of that information. We can use it to our advantage so that we don't anchor to one piece of data or one belief that we have about a certain company or a certain country or a certain outcome of the election. So hopefully this isn't too disappointing to the audience here, but regardless of what candidate you are voting for, the market could care less about your opinion. And you may be very despondent on November 6th that your candidate didn't win. That will not change what the market is presenting you. So all of the analysis around whether or not a Republican-led Oval Office or Democratic-led Oval Office has an impact on the market, what we're seeing right now is that despite all of that indecision about this upcoming election and the fact that it is a very important one for civic engagement, we encourage you all to get out there and vote early and vote often, but you don't necessarily see that showing up in any kind of meaningful way to disrupt the trend that is in place for the S&P 500. So Alex, let's continue on, because the analysis doesn't stop at the index level, nor do we even just take a look at the top line cap-weighted indices. Let's take a look at the S&P 500 on an equal-weighted basis. We can use the ticker symbol RSP. Now we're getting a sense of what breadth is doing, and you've heard a lot of analysts talking about the healthy rotation of this market. We've seen a lot of new leadership emerge, and frankly, in a very frenetic, very fast-paced rotation, seeing different sector groups, different styles leading throughout the year 2024. So on an equal-weighted basis, Alex, here on this weekly chart, I'm seeing similar go trend conditions.
Yeah, and actually we're seeing, a sort of a more even progression through this trend with higher highs and higher lows. And you can see again the oscillator finding support at that zero level. At the moment, we've just come off a new higher high. Now those red triangles, Tyler, those are our go counter trend correction icons, and that comes when our oscillator has gone overbought and then come back to neutral. So what that tells us is that in the short term, there may be some struggles for price to go higher, just like we saw here after this one. We saw a little bit of a fallback before the trend continued. So that tells us that momentum has been very high and has waned just a touch. So that tells us over the next couple of weeks, perhaps we'll see some consolidation against the trend. Perhaps not, right? We know that any kind of overbought condition sometimes means that we'll just blow through that warning, but there may be some struggle for price to go higher in the short term, but certainly doesn't mean the trend has ended. Trend is still painting those go bars, and momentum is positive on the weekly chart.
Now, earlier this year, coming into 2024, I've heard countless analysts criticizing the market's rally based on the narrowness of breadth. So they were talking about the Mag 7 being the only things holding up the index, and that the average stock in the index was not performing nearly as well. And so when I explain breadth to college students, and I do do a lot of lecturing about technical analysis, I let them know about my absolute all-time favorite team, the 1990s Chicago Bulls. And of course, everybody thinks about Michael Jordan, the greatest basketball player of all time. Sorry, Steph Curry fans. But it wasn't just Michael Jordan. That was an incredible team with a deep bench of incredible players. Scottie Pippen and Dennis Rodman and every person on the team had a job to do, and they did it exceptionally well. So while Michael Jordan was quite the star, the way you win 6 back-to-back NBA championships is by having a complete team that can support that kind of championship play. So this rotation, what we're seeing on an equal weighted basis, is the average stock in the index is also participating to the upside in strong go trends. And that is a really powerful indication of a bull market that is healthy, alive, and set to continue. Now, Alex, let's talk about the orange grid in the bottom of the GoNoGo oscillator panel.
Yep.
So tell us a little bit about volatility compression.
Yeah, I mean, we talked just a little bit about how important that zero level is for our oscillator. So remember, that means that all of the conditions, all of the inputs to our momentum analysis are in their neutral territory. So that means there's very little directional movement when the oscillator hits zero. That's we've got no overbuying, we've got no overselling. The inputs are in their neutral territory. So if you expand on that, think about what that means when the oscillator gets stuck at the zero line. That tells us that there's very little winning being done by either the bulls or the bears, right? You're in this virtual tug of war between buyers and sellers. So for every bar that the oscillator stays at zero with no overbuying conditions, no overselling conditions, no directional momentum in either way, we allow the GoNoGo squeeze grid to climb for every bar that the oscillator is stuck at zero. So as that grid climbs, it tells us that we've been in an extended period of that neutral momentum where we aren't seeing any enthusiasm or any winning from one side or the other. Because of course, this could be a lot of trading activity, but the oscillator being unable to get away from the zero line tells us that we are not seeing much movement in one direction or the other. And you can see that in price. As the grid builds, you can see that the range of trading sort of narrows here. We're seeing that consolidation as nobody's really winning. We're not pushing prices higher or lower. So as that price movement moves sideways and volatility compresses, we see the climbing grid of the GoNoGo squeeze. And then, of course, it becomes important to watch for the break of that squeeze. So if you're familiar with Bollinger Bands or Keltner Band squeezes, that's what we're really looking for. We're looking at these periods of reduced volatility, and we're highlighting them on our oscillator panel with the GoNoGo squeeze grid based on how important we know the oscillator being at zero really is when in trend. So then we look to see the breakout, and if all else being equal, if you're in a go trend, you see a buildup of a max GoNoGo squeeze, you see the breakout then in the positive direction, that's a signal or a sign that the trend is likely to continue, because of course we're seeing resurgent momentum in the direction of the trend. So those periods of volatility, people sort of shy away from volatility, but finding those periods of reduced volatility that can lead to periods of increased volatility, those are powerful moments. And I always used to be told that it's like squeezing a tube of toothpaste until eventually the top pops off. And that's what you're getting here with that release of volatility as price action starts to move more aggressively. And then we've moved, of course, to new highs since then.
And of course, those critics of breadth really reached a fever pitch in May and June, as this equal weighted S&P chart is telling us. There was real stagnation, and I'll admit I myself wasn't really sure what direction this was going to break, which is why we use the evidence in front of us to make sound, objective decisions rather than fall victim to our fear or greed. So when we see the break of the GoNoGo squeeze, momentum takes off in the direction of the underlying trend. And that's where we see breadth expanding, the average stock in the S&P 500 also climbing to new highs. Okay, so now we're just talking about the US equity market. We're in a bull market. It's in strong go conditions on both a cap weighted and an equal weighted basis. For all of you who respect John Murphy and the power of intermarket analysis, we can do some top-down views. Doesn't mean you have to trade bonds or currencies or commodities, but from all of those markets, there's a ton of information that will tell us about headwinds and tailwinds to the rest of the marketplace. So, Alex, let's take a little top-level view of what's happening across the asset classes. Let's just pull up TLT. Long-term bond ETF, and of course, everyone's eyes are on Jerome Powell. I would argue he has much more impact on the marketplace than any presidential candidate ever has. And I'm sure our good friend Ryan Dietrich, fellow CMT charter holder, is going to show us a lot of the historical data about what has happened to markets in election years when you have an incumbent candidate, and what happens to markets. But if we're just looking at the bond market and knowing that bond prices are going to move inversely to U.S. interest rates, rising bonds, falling rates, and we know that a liquidity environment where the Fed is cutting. Yes, the first cut was 50 basis points, and I know there's infinite speculation about each and every Fed move. Instead of worrying so much about parsing the language and going through the FOMC meeting minutes, we can look at what the market digests out of those moves by simply looking at price action.
Yeah.
So, Alex, talk to us about what's been happening here in bond prices of late.
Yeah, and so this is a weekly chart. So remember, if we drop this down to a daily, we'd see the movement sort of in more detail. But you can see that over the past period of time here, we've set higher lows and we've moved into a go trend on the weekly basis. So that means bond prices in a go trend, and so of course rates have been falling over this longer period time frame. Now, if you look to the very last few weeks, you can see that we have fallen away. Prices fallen lower for treasury bond prices, but we are in a go trend. The weighted lead evidence says that we are still in a go trend on a weekly chart, and we are looking at the zero line on the oscillator because it's being tested right now. So we've seen this sort of reaction against this new go trend over the past couple of weeks. This is going to be a very important moment, Tyler, because we're going to watch to see if the oscillator finds support here and bounces back into positive territory. And if it does, then we may see this as a new higher low as bond prices move perhaps higher to challenge for new highs. Of course, if the oscillator breaks the zero line into negative territory, that would be more of a concern. And you're seeing that movement on the daily chart moving lower in more detail.
Absolutely. Let's turn our eye to the U.S. dollar. Dollar strength, dollar weakness, having a big impact on globalized corporations that we work in these days. So we like to use ETF proxies. So for the dollar index, the ticker is UUP. And we have seen over this weekly time frame quite a bit of chop.
Yeah.
And actually, Alex, I like the longer term view, because we've been drifting lower now for quite some time. Since January 2023, we've stabilized in this range, if not drifted lower overall in the dollar index. And that is an inherent tailwind for risk assets and for U.S. equities. And if you zoom back into kind of that right side of the chart, we can see that the GoNoGo oscillator retesting the zero line from below. We're back at neutral, but still very much in that range. We're not seeing dollar strength taking off to the upside, nor are we seeing it collapsing under the weight of rate cuts. That to me signals to all investors, right? Stable US dollar is incredibly helpful. I think what investors really get spooked by are rapid moves in interest rate hikes or falling, or rapid moves in dollar strength. And we're just not seeing any of that, but much more range bound activity and stable over the past several years. So Alex, let's move on from the US dollar. Let's take a look at IAU, a proxy for gold. Now, all through the pandemic, going back 4 years, there were a lot of investors talking about, gold is the flight to safety. Throughout a rising rate environment, you're going to see gold spiking to highs. We didn't see that materialize. And the textbooks would tell us that we wouldn't see a risk asset or equities rally at the same time that you would see a gold rally. But that is what is happening. The markets are there to fool as many people as possible at any given time. And we are seeing gold above that major $2,000 an ounce level that has been resistance for almost 15 years. Breaking out above 2,000 an ounce gave room for that trend to really move to the upside. So, Alex, talk us through what we're seeing here for gold.
Yeah, it was really an amazing thing to watch. So many of us were looking at that sort of 13, 14-year pattern on the really long-term charts, looking for that breakout above the resistance for what a lot of people were seeing as a cup and handle. And it just kept trying, didn't it, all the way through those few years and not doing it. And then, of course, now it's really broken above those levels. And we're quite far away from that now, and there's really nothing above it. So we've got a lot of analysts really bullish on gold, and you can see that this year we just have seen so much of that movement that people were waiting for so long. And if you look at it just from purely a go-no-go perspective, we're in strong blue go bars on this weekly chart at new highs. Oscillator's been finding support at zero, and now you can see that we are actually still we're remaining elevated on the momentum oscillator, and we're at a value of 5. So at the moment, we're still in overbought territory. We'll watch to see if it does cool off, and perhaps we'll see a counter trend correction icon and maybe a few weeks of pause, but certainly looking very, very strong on the weekly chart.
And so in terms of asset allocation within your portfolios, the fact that precious metals are moving in this way and they are a non-correlated return stream, it might make sense for folks to think about diversification and capturing trends, no matter where they are across the asset mix. Gold has certainly been a strong performer here in 2024 and is not showing signs of giving up that trend anytime soon.
Yeah.
Let's take a look at another couple commodities. Let's take a look at USO and get a sense of what's been happening in the oil markets. Now, if you're a fan of Martin Pring and you've been reading about the business cycle and the liquidity cycle, you can understand that commodities tend to trend in late stage environments. And so when we're seeing rapid increases in the cost of energy and fossil fuels, that can be a real headwind to business operations. Since the middle of 2022, we have seen this same range-bound stability in oil prices, and seeing it on this chart, right? We spiked back to the average after the COVID collapse, but we're not seeing runaway prices in oil, and that to me is a very stabilizing factor for a lot of businesses and for investors at large. So Alex, if we drop into just the daily basis, right, for those oil traders out there, get a sense of kind of this chop and this mean reverting work that's been happening in the range, you can still use GoNoGo charts on shorter time frames to capture those moves and use the GoNoGo oscillator to your advantage. So when we talked about breaking the zero line or finding resistance at the zero line, do you want to talk to us a little bit about the icons that show up on the chart to show us some trend continuation?
Yeah, absolutely. And so what we like to do is bring the visualization or bring the data, the understanding of the data back into the chart through data visualization. And we're both big sort of fans of data visualization and done a lot of work and research in that area. And I think what we tend to do sometimes is cloud our judgment through having so much information, but not an easy way to sort of understand it. And for me, understanding it is often by visualizing it. And so with the icons that you see on the chart, these triangles and these circles, what we've done is we've tried to highlight the important interactions between the momentum panel and the price panel. So let me give you an example here. In this period of a no-go move, when the trend is in place, we turn our eye to the oscillator panel to understand whether or not momentum is finding support or resistance, as we mentioned earlier, at this objective zero level, because we know that if we're in a no-go trend, momentum should stay at or below zero. We should have periods of selling, maybe then some neutral momentum readings, and then more selling again. So whenever we are in a no-go trend and the oscillator turns back into negative territory, we're going to give these no-go trend continuation icons on the chart, which tell us that now we're seeing momentum again aligned with the trend. So you see here as well, we had this sort of relief rally, we had the pink no-go bars, but as soon then as the oscillator turns back into negative territory, we know that momentum is resurgent in the direction of the trend that's in place. And of course, in this case, no-go trend in place. So this is a no-go trend continuation icon, which tells us that in all likelihood, price is likely to continue in that direction. Of course, then when we come back up here, later in the chart, we see a strong relief rally, lots of pink bars, an attempt to roll over as it hits resistance from these prior lows. But the oscillator does not get back below zero this time and instead finds support at zero. So we don't see trend continuation. What we see is more uncertainty. We see some amber bars, some go fish bars, and then, of course, now a first go color, the aqua color for the first bar here in a go trend with momentum now in positive territory. Now, the other last thing that we haven't talked about on the oscillator here, Tyler, is the changing color from the lighter aqua to the darker blue. And what we've done here is by putting an emphasis on volume when that line changes color, it can give us that volume analysis, that confirmatory indication of what's happening with the trend. So when you see the darker blue, that tells us it's heavier than normal volume. So in this period of a no-go trend with prices moving lower, we saw pretty heavy volume. So that's the market participating in that trend. That sort of represents market enthusiasm for us. Interestingly then, price moving higher on this relief rally, volume weakening. So there's that uncertainty here. But as price has really kicked on and moved higher, the volume has come back. So that volume here on these last 3 or 4 weeks tells us that the market is enthusiastic or participating in this move higher. Now, I know that was a lot. Last thing I just want to mention here is because we only have the one panel which is large for price, because we put all of our price tools into the colors, and we just have the one panel on the bottom for everything else, you can still quite easily see important levels on the chart. And you can see how firmly price was rejected at these horizontal levels that were resistance before. So this is going to be a crucial area for price to get through. But at the moment, new go trend, excuse me, new go trend and positive momentum on heavy volume.
So a dear friend of mine, Buff Dormer, who is probably the world's foremost expert on volume studies, said that price is the testimony of the market and volume is its polygraph test. So the price action is going to tell you what the market believes is happening, and then you're going to find out if it's lying to you by checking with volume, which I thought was such a powerful analogy for using that confirmatory indicator to your advantage. All right, Alex. So new candidates, a lot of discussion in all of the debates about energy policy, about pipelines, about the geopolitical tensions that we are facing. Do they have an outcome, an impact on price action for energy prices? Of course they do. Would I be able to tell you, even if I knew right now, crystal ball, who's going to win and exactly what policy measures they're going to put into place? I couldn't tell you when those would take shape in price action, how the energy industry is going to digest that, and what other forces might be impacting. So having a crystal ball about a presidential election is not going to give you the information to be a profitable trader or investor. But on that thread of geopolitics and thinking about a large global marketplace of securities that we could invest in, I think it's helpful to talk to every investor about diversification around the globe. So let's take a look at a couple of other country level equity indices and just see how they're doing. Let's check in on my friends in India. INDA is a ETF that captures the Indian equity markets, which have been dynamic and growing, very strong economy and incredible participation in their markets. So going back to the summer of 2023, right, over a year and a half, we have seen this go trend continue with no break in momentum below the zero line. We're seeing positive momentum on the heels of this rip roaring go trend. These last couple of weeks, a lot of the headlines in India, a lot of the folks that I work with over there are talking about, major meltdowns. People are freaked out about the volatility that they have seen in the last couple of weeks. But when you zoom out to a longer term chart, it's a very healthy counter trend correction. We're not even testing the zero line yet. And that helps illustrate this power of the emotions and the bias that we bring to our analysis. When in doubt, zoom out. And a healthy correction on a weekly chart may be very destructive for intraday traders, and your risk levels would have been stopped out far before this. But for longer term investors, contraction within an uptrend, right? We know it doesn't move in a perfectly straight line, but climbs higher and backfills throughout the trend. That is healthy. And in the raging bull market of 2021, I saw countless experts on social media talking about just buy the dip, every time it corrects. It's just another buying opportunity. And so what Alex was talking about with that retest of the zero line, finding a quantifiable way to tell us when a correction is a healthy correction and an opportunity to add to your position size or to enter a trend that you weren't participating in yet. That's the power of GoNoGo Charts, is that we want to take our bias and emotion out of this, but we still want to be responsible. We don't want to just BTFD all along the way. We want to make sure that momentum is triggering to the upside, confirming the underlying trend. Alex, let's take a look at another one that's been all across the headlines and I'm sure shown up on everybody's scans and alerts. MCHI. China has been ripping to the upside most recently, but after a very long-term downtrend. So we've seen years of a lot of destruction of the equity markets in China. Xi Jinping doing a whole lot in terms of rate cuts and a lot of conversation about a new fiscal policy. Looks like investors are digesting that news in a positive way. But what we're going to use is not Xi Jinping's commentary. We're going to look at how the market reacts. And Alex, why don't we drop this into a daily or even intraday look for those shorter term traders. So here's our daily. And if we simply enter the go trend when it is signaled, you're capturing all of that upside move, right? Now, none of us can tell you what happens on the right side of a chart. We don't have the ability to predict the future. Sorry to break it to you. But by simply following our rules and participating in go trends, getting out of no-go trends, if you're a long-only investor, that can be really powerful in terms of capturing reward and return. So let's move on again, Alex. We had a incredible VIX spike, and I know in the interest of time, we're gonna move quickly through these last few charts. But let's pull up the VIX. Early August, we saw a spike to around 60. That was a painful Sunday night going into Monday morning. We saw a lot of volatility, and yeah, we can jump that out to the weekly. From the start of this bull market, we have seen waning and calm instruction from the VIX, and that spike that we got in August certainly changes the trend, but we have not seen that break to new highs, right?
Yeah.
We are still stuck below resistance, save for that one Monday in early August. But talk to us a little bit about what we're seeing in terms of longer term trend on the VIX indicator.
Yeah, I mean, I think just generally we are at low levels for the VIX. I mean, people talk about having certain levels that they're happy with, below 30, below 25, whatever that might be. These are not high levels for the VIX. Of course, this one period here in August was quite a spike, but that quickly came back off. And as you said, now we're below these levels that were resistance before. So generally speaking, volatility is still low. Now, having said that, we have seen a change and we are in go colors. So we're definitely above the lows. And so we want to just keep an eye on this as it moves forward, but definitely still not high levels of volatility.
And when the Bank of Japan gave us a surprise interest rate policy decision, and we saw a massive unwind of those carry trades, it's all widely understood after the fact. And in the moment, it's very difficult to pinpoint what is causing market moves. And I would encourage all of us to not consider ourselves such an expert that we could explain in real time exactly what is driving markets. That's usually a story that comes out weeks later in the news. But what we can do is react responsibly given what the market is telling us. All right, Alex, back to the S&P 500, back to our equity investment strategy, and thinking about this election. What I would encourage everybody to do is, from this top level perspective, right? We've seen the volatility is pretty supportive. We've seen that oil markets are very stable, that interest rates are now even moving in the favor of a tailwind, and we have seen bond prices begin to rally as rates are falling. If we dive under the hood of an index, we can take a look at sectors, we can take a look at industry groups. And so for the S&P 500, let's run through the sector ETFs real quick and just get a sense of the overall trend of what's happening. And then we'll look at a couple of ratio charts as well. So let's start from the top. XLK is the information technology sector. I'm seeing go trends, Alex. Talk to me.
Yeah, absolutely. I mean, that's a pretty nice one. Of course, there was a pretty big fallback here from the go trend counter trend correction icon, but stayed in go bars. We can see that the oscillator right now is testing the zero line. We're in a go-no-go squeeze, so we're going to watch to see in which direction that resolves. But yep, a go trend for the XLK.
How about XLY, consumer discretionary?
Yeah, very similar story. We did see some amber bars creep in at these periods where prices fell back, but no goes. And now we're in go colors with the oscillator in positive territory as well.
Fantastic. How about the communications sector, XLC?
Even better. The sort of pullbacks even less pronounced for the communications sector. And we can see that the oscillator's been finding support at zero over the last several months. So new highs, positive momentum, go trend for all of these growth sectors on a weekly basis.
Now, I know I'm cheating because I've already looked at the industry groups that make up the communication sector. Those that are pulling this higher include media companies and advertising. And who would have thought that in a highly contested, very dramatic national election for the presidency of the United States of America that there might be more ad spending, more advertising? Yeah. So if there's one takeaway for elections, it doesn't matter which candidate you are rooting for, you can participate in communications trends as all of that ad spending ramps up. All right, let's move along and take a look at the XLE, the energy sector.
Yeah, so as we saw with the oil charts, the energy sector has been super choppy, especially on this weekly basis. So not really telling us much here other than market is unsure. We're seeing these amber go fish bars, oscillators struggling to get away from the zero level. So a very choppy chart for XLE.
Absolutely. And let's move on. How about industrials? XLI.
Yeah, so the industrials has been in a solid trend. We did see that period here where we drop below the zero line and then a no-go for a few weeks or a month. But then for the last sort of almost a year now, or just about a year, we're seeing that trend take place. Go colors, oscillator in positive territory. So looking pretty good for industrials as well.
Absolutely. How about materials? XLB.
Yeah, similar story, a little bit more movement, but yeah, we're in a go trend, strong blue bars, oscillator, positive territory. And we're seeing all of these continuation icons as price moves sideways. You can see how many times the oscillator went back into positive territory. So that was a good sign. And then, of course, now we've made new highs.
And I love that there isn't a clutter of indicators on that price panel, because we were in a range bound area and broke to the upside. And now that trend is moving higher. Being able to identify Darvis boxes or flags or pennants, whatever pattern recognition you may have read about in your studies, being able to see a clear price panel is powerful to see those clear levels of breakout. Moving on, let's take a look at the financials sector, XLF.
Yeah, again, on a weekly chart, what a nice move. Very sort of smooth and consistent, not a lot of pullbacks. And you can see again how important that zero line is when we're in a strong trend. You see that period of sideways movement and then the breakout higher as the oscillator breaks out of a max go-no-go squeeze here. It's already found support again, and now we're at higher prices. So you can see very consistent momentum here, staying at a value of 3. So we're watching that now, but definitely momentum on the side of the go trend.
And how about healthcare, XLV?
Almost almost the same, right? Like strong trend, oscillator finding support. Now instead of being in positive territory, we're seeing the oscillator back at 0. So we're watching that test of the zero line. If it finds support here, we'll look at likely trend continuation on the price panel.
Absolutely. And let's take a look at consumer staples, XLP.
Another one. I mean, this is the beauty of pulling things back, right? And like making sure you're looking at the larger context, because we are seeing strong moves across these sectors for participation in the larger trend of the S&P.
Mm-hmm. And utilities, which had been rip-roaring this year as electricity prices continuing to climb.
Yeah.
Another bull market chart there, Alex.
Yeah, and this is just real quick to highlight the length of this no-go move and then how important the breakout of these squeezes was here. Like a long, drawn-out max go-no-go squeeze as price shrunk. Same thing here. And each time we're seeing, okay, a little bit more positive inclination here. And then when it breaks, that's the leading indicator for the go trend. So remember, momentum is a leading indicator. We've all done that sort of traditional technical study, and we know that momentum is a leading indicator. So as that momentum changes from being primarily below the zero line to being primarily above the zero line, that leads us then into the go trend. And now we're finding support and we're in positive territory.
And last but not least, XLRE, the real estate market.
Yeah. Is it a sector? Isn't it a sector? But the chart's fairly similar. We're in a go trend at just coming off highs. Going to watch to see what happens here when the oscillator approaches the zero line. We'll look to see if it finds support, in which case go trend likely to continue.
Now, I know we are coming up on time, but one of the most powerful concepts in technical analysis is relative strength. So we just went through all 11 sector spider ETFs to take a look under the hood of the S&P 500. What we would do at GoNoGo Charts is to look at the ratios of those sectors against the benchmark. The concept of relative strength is we want to own those things that are beating our benchmark, looking for longs and shorts based on the relative momentum of those sectors. So just as a quick example, let's take a look at the XLC versus the SPY. And in TrendSpider, it's just a simple division of the sector over the benchmark. And we can see that it's been tracking quite tightly and yet outperforming if we go back to the start of this bull market in 2023. Yep. So for all of you at home, I encourage you to take a look at ratio charts whenever you're looking at your top-down perspective. You can do this across the asset classes. You can do this sectors to a benchmark index. You can do this individual securities against either their sector, their industry group, or the broader market. That's a really powerful concept in technical analysis, and one that we use every single day. Alex, the last thing I think we wanted to touch on were just some of the thematic moves that might lead us into year end, and probably not going to be changing their trend conditions based on the presidential election. Let's hit these real quick. Pull up the ticker symbol IAI. And so when we looked at the financials sector of the markets, we know that that's a broad mix of banks and well, large global banks and municipal banks. This is an ETF of broker dealers and exchanges. So if you really enjoy trading and don't love paying exchange fees, this is the chart for you because you can profit on their profitability. Broker dealers and exchanges have been in a very strong go trend. Look at the positive momentum and one test of the zero line giving us a trend continuation. How about cloud computing, Alex? SKYY. Wow, say that 5 times fast. You're going to be in a pop song. There's a bull market, and we're not seeing that change at all. So a lot of media attention on the AI revolution, a lot of focus on the semiconductor space. But there's a lot more happening, innovative work across the marketplace. Some of these thematic ETFs really caught our attention when we were doing scanning and screening. How about one more? Cybersecurity, ticker symbol HACK, HACK. Not a bad trend, right?
Yeah, and what's interesting here is that we seem to be taking out these prior highs, right? So we failed here. But now we seem to be consolidating above those levels, and the oscillator's in positive territory, and we're seeing strong go bars. So that's a nice sign as well.
Absolutely. So, folks, that's what we wanted to walk you through today. Sectors, a top-down approach across the asset classes, and then just the basic concept of letting the evidence deliver your opinion rather than forming your opinion and then searching for the evidence that would support that. So this election season, I'll quote a famous U.S. philosopher, Vince Vaughn: get out there, vote like a champion, and we'll see you again on the next TrendSpider conference. Thanks so much for listening.